As a business owner, the most powerful way you can reduce your tax bill is to maximize your tax write-offs. But a lot of business owners are doing this completely wrong. They are either missing tax deductions or taking deductions that they cannot prove to save their life. Without proper documentation to support your tax write-offs, you risk losing them in the event that the IRS challenges it. Or even worse, you can lose the deduction and be slammed with huge fines, penalties, and interest. Now, this can easily be prevented by simply following the IRS documentation rules, which most business owners are completely unaware of. Some business owners think that they can just use their bank statements to support expenses they claim as deductions, which is not true. And others are completely overwhelmed by the receipt requirements because they don't have an easy way to keep track of it. So today, not only am I going to give you the correct way to support your tax deductions, but I am also going to give you the easiest way to maintain those documents as well. And all you have to do is like this video and stick around until the end. If you're new here, my name is Sherman the CPA, and I tax plan for business owners every day at mycpacoach.com. I constantly coach my clients on which documents they need to keep to support their tax write-offs, so at the end of the day, they feel good when they file their tax return. And that is how I want you to feel by the end of this video. So let's go ahead and get right into it. All right, so look, according to the tax law, it is your responsibility to prove the legitimacy of your tax deductions if it is questioned by the IRS. If the IRS sends you a letter and wants to learn a little more about a deduction on your return, you have to send in information to support it. And if you are unable to do that, they can disallow the tax deduction altogether, resulting in a tax bill which may include more tax, interest, and penalties. And it would be unfortunate to lose a valid tax deduction that you legitimately qualify for simply because you cannot support it. So look, documentation is the #1 way you can defend and protect yourself from the IRS. If they knocked on your door tomorrow to question any item on your tax return, ideally you would be able to easily point to your documentation that supports that tax position. It's just hard to dispute proof, and you can easily get the IRS off your case by providing proper documentation. But what exactly does that look like? Let's talk about the IRS documentation requirements, and then we'll talk about how you can easily implement this. So when it comes to documentation, the IRS requires two things. #1, a record keeping system that clearly shows your income and expenses. And #2, supporting documentation to support records in that system. Let's make sure you fully understand both of these requirements. So first, what is a record keeping system? This is basically your accounting system. So every transaction that goes in and out of your business is a record. And all of those transactions should be recorded in your business books. Now, the IRS does not specify how you are supposed to do this. In fact, they specifically state that you can choose any record-keeping system that clearly shows your income and expenses. Now, of course, in ancient times, business owners had to do this by paper and pen, which was then upgraded to spreadsheets. And now today we have software available that can automate most of this for you, which I will show you later in this video. But regardless of what you do have a record keeping system. Next, you need to keep up with supporting documentation. Now, contrary to popular belief, supporting documentation is not just your bank statement. Your bank statement proves that you actually spent the money, but it does not prove what you paid for. Actual receipts, invoices, and bills are required to support expenses that you paid for. These documents will specify the what, when, who, and how of the deductions you take on your return. It will show what goods and services were purchased, when it was purchased, who purchased it and who it was purchased from, and most importantly, how it relates to your business. These are details that cannot be found on an income statement or on your bank statement. But the IRS may need this information to verify that your tax write-offs are valid. So whether you're writing off advertising expenses or a car you just purchased, make sure you keep up with your receipts. Now, there are certain tax deductions where even more documentation is required, and these are for expenses that the IRS are more skeptical about in general, like travel, transportation, meals, and gifts. For these types of expenses, you need to keep up with a log, agenda, diary, or something of the sort that documents the details of each expense you incurred. For example, for business travel, you have to document these things for each expense: the date of business travel, where you traveled to and from, the business purpose of the travel, the mileage to and from that travel destination, the type of expenses you incurred, and the amount of those expenses. Now, we hear a lot about how people write off their cars, vacations, and other fancy expenses, but what we don't hear a lot about is the work they are doing to prove these deductions. And unfortunately, people often miss this step and find themselves in trouble with the IRS later. But now that you know the documentation requirements, you are probably wondering if there is an easy, simple way to keep up with all of this stuff. If so, the answer is yes. So let's talk about the easiest way to keep up with your documents to prove your tax write-offs. So thanks to technology, there are ways to simplify everything from record keeping and maintaining your documents. To simplify everything, most people just use QuickBooks Online, which can sync directly to bank accounts to automatically record your income and expenses. You can set up rules that automatically classify and categorize transactions from your bank statements into your income statement. Then, for electronic receipts, you can easily upload your receipts directly into the system or simply send it from your email address. And you can even simplify this for your paper receipts as well. For paper receipts, you can use the QuickBooks app to easily attach your supporting receipts into the system. The app even has features to automatically track your business miles if you need help logging your business miles as well. So in my opinion and in my experience, this has been the easiest way to comply with the IRS record keeping requirements. If this video was helpful, make sure you subscribe for more videos like this. And if you want a comprehensive tax plan to reduce your taxes, then consider applying to work with me directly at mycpacoach.com. Thank you for watching, and I look forward to seeing you in the next episode.